Good evening, guys. It's O'Neill Anderson here from GlobalFX. I just quickly want to go through this GBPJPY technical setup that I had actually shared a couple of days back. So basically, what we can see with the market is now we can see that the market is actually retracing or having that pullback back into this 131.300 level, and we had forecasted that we were looking for buying opportunities at either 131.300, or we could possibly even come down to 130.650, so at approximately those price levels. So I'll just go ahead. I'm going to remove all of these chart markings that we have here. Then I'll just run you guys quickly through to how I actually got to the setup and to what my opinion is rather on the GBPJPY. Let me just remove all of this stuff here. Okay, so the first thing I had done when I actually had looked at this pair here, well, before I even get into that, if you guys recall, I had actually dropped a video setup. This was last week, and we had actually wanted to go short at approximately 132.165, so approximately that price, or rather at this level of resistance, and the market was at this support at that time, and I had expected a pullback further into this area before actually going short, but we can see that we did not actually get that entry, and market only retraced back to 131.420, so approximately those prices. So we didn't catch that trade, but the overall direction was correct. For those of you that did actually go short, congratulations to you guys. But I just quickly want to explain my forecast for this week on the GBPJPY. Well, the first thing I had done was I had initially looked at the daily time frame. Reason being is because the daily time frame, that's the time frame I use to basically get the market direction, right? So what we can see here on the daily time frame is that um, the market had moving in a rather bearish market structure. We can see that you have lower lows and lower highs. So this is what we've been seeing on the daily time frame. So we have these lower lows and we have these lower highs. Now that's the first thing I do before um, doing any forecast or rather predictions of where price is heading to next. I always look at my overall market direction, and in this case here I had used the daily time frame. In some cases you would notice that I would actually use the 4-hourly time frame, but to me what stood out between the 4-hourly time frame and the daily time frame is that if you look at the higher highs and the higher lows, the market has pretty much been moving in a consistent market structure on the daily time frame. Now we can see that we are still in a overall bearish trend on the daily, right? But if price had to break above this lower high, for example, if it had to come up to 133.680, then we would consider that market structure to be broken. Now keep in mind this is only for the daily time frame, right? So I had kept that in mind that uh, overall market direction, we are still pretty much bearish on the GBPJPY in the daily time frame. I mean, if you also look at your moving average and your EMA, we are still basically we are a bit below that, but soon enough we will actually see price moving above these moving averages. So that's the first thing that I had looked on the daily time frame. Now if you actually go to the 4-hourly time frame, which is it's much more interesting. If you look at the market structure on the 4-hourly time frame, what you do immediately pick up is that you still have these swing highs and these swing lows, right? So we had that high, we had this low, we had this lower high, and we have this lower low. And we currently see that the market in this week formed another lower high, right? But that is basically these lower lows and lower highs. These are the turning points in the market derived from the daily time frame. But if you look closely to at the market structure on the 4-hourly time frame, you would notice that we have that high, and then we have this low, then you have that high, and then you have this low, and then you have that high, and then you have this low here right bottom, right? Now what's interesting on the 4-hourly time frame is that this high here, this lower high, right at about 131.31, I mean 319 or 320, we can see that that high has been broken. So whenever you have broken structure, first thing that comes to mind is that market direction. We could be seeing a market reversal, right? So that is on a 4-hourly time frame. So on your daily time frame, keep in mind that the overall direction, we are still bearish, but that is more depending on your trading style. That is much more good for swing traders. But for me, I usually hold my trades for approximately a day or two. So coming back to the chart here, so we had that market structure that was broken. I'll just highlight it here with a rectangle. Now if you also look closely here, you had a bit of support, so we can see that that market structure there, or that swing high, the lower high, has been broken, and price is actually coming back to retest that broken level there, right? So on the 4-hour, possible reversal, that is what we can see on the 4-hourly time frame. Now if you're looking at your, in terms of your Elliott waves, what I won't get into detail as to how you actually trade your Elliott waves, or how you should actually do your wave count. I think that's a topic for another day. But you can see we have this high here at the top. So we had this huge impulsive wave. So that's wave 1. We had wave 2, a pullback. You had wave 3. And then you had wave 4, correction. And wave 5 right here at the bottom. That's where the market actually bottomed out. Now I know some of you would argue that wave 3 should be the longest, but always remember with the Elliott waves, well, this is just how I use it, is that with your impulsive waves, meaning your wave 1, wave 3, and wave 5, from these 3 impulsive waves, the third impulsive wave, or rather this wave 3, it's not allowed to be the shortest impulsive wave, right? Always remember that. Just think about that very carefully. So meaning that a wave 1 can be longer than wave 3, but if that is the case, then wave 5 has to be shorter than wave 3. So that is just the way I use it. I know that some of you would love to beg to differ, but this is the way I use it, right? So that is what we can see on the 4-hourly time frame. And what do we usually have at the end of wave 5? We have a ABC correction, right? Now your ABC correction would what I had forecast would be something like this: A, B. So this wave A would have come to break this market structure here. Then you had B, and this B corrective wave would basically be a retest of that broken structure. They're looking at wave C, and then wherever wave C would be, then we'll be looking to sell the market, and then that sell would actually complement the overall daily market trend, which is bearish, right? So that is the first thing that I had actually noticed on the GBPJPY. Now this is just randomly um, looking at what correlates, basically looking at correlation, right? That is the first thing that we can see. We can also see that if you draw in a trend line from this initial high to where we had the end of wave 2 corrective, we can see that we had a break of that descending trend line, right? And then we had this pattern here, right? Then I had also a question. I can't recall exactly who it was in the group that actually messaged me on WhatsApp as well as on Telegram, that actually asked, but how is it that this wave here is actually overlapping this wave here? Meaning that if you look at wave 1, the end of wave 1, then wave 2, wave 3, so wave 4, right? And we know that wave 4 is actually not supposed to overlap the end of wave 1. But always remember that if you have like these asymmetrical or asymmetrical patterns, you can actually, the waves, they are allowed to overlap, but this is the only exception. If we did not have this kind of market structure with this kind of pattern, then yes, I would agree that they should actually not overlap, right? But that's just the way I trade. Some of you might have a different opinion, but this is how I trade and it works for me, right? So that is the first thing I had seen. Now, if you guys recall correctly, this was last week when we the GBPJPY. We actually had a on the GBPJPY. If you guys recall that correctly, right? So we had this short here at point D. So we did sell here. We had our first targets being here and our second target right here at the bottom. Now, if you look at this pattern here, this is basically, it's a XABCD pattern, right? If you know how to trade this pattern, you would notice that it's very similar to what might possibly form on the GBPJPY, with basically, if you take a fib retracement from point X down to point A, then you do know that point B, you're not allowed to have a candle close above 6.8, right? So that's point B, right? That is the one restriction for point B. In order for this pattern to be valid, is that point B is not allowed to have a candle close above 61.8 if you pull your fib from point X to point A, right? Now for point C here, right at the bottom, we know that you take your fib extension or expansion, as some of you would call it, from point X to point A, then back to point X, and then point C should reach approximately 1.272, right? These are the rules basically for this pattern. Point C should reach 1.272, but you cannot have a candle close below 1.414, otherwise it would invalidate the whole pattern. The same goes for point B. If you have a candle close above 61.8, it invalidates the whole pattern, right? So we had verified point C. It does respect those restrictions, or it still is within those restrictions. And then we have point D here at the top, where we had our sell entry. Now point D, usually it gets to 78.6. If you take your fib from point X down to point C, then you will have the 78.6, and you'll be looking to enter short at 78.6. And then basically for your take profits, you would then just take your fib from point X to point D, then you would target 38.2 fib retracement as well as 61.8. That would be your first and your second target. Now let's just go back to the GBPJPY. Now just remember those restrictions that the pattern has for it to be valid. If you look at GBPJPY, right, let's just assume that it's the same pattern that's forming. So this would be point X down to point A. We can see that this point B, right, this is where we have point B. We can see that point B did not actually, we don't have a candle close above 61.8, right? So we remember that this is under assumption. We're assuming that it is the same trading pattern that has formed in the USD JPY, right? So point B is valid. Now, if you guys remember, the way we verify our point C is that we take our fib expansion or extension from point X, which is right here at this high, down to point A, then back to point X, and then we should have a 1.272, right? And as we can see that we do have indeed a 1.272 right here at the bottom, and we don't have a candle close below 1.414, otherwise it would invalidate this pattern. And to get our point excuse me, to get our point D, recall that on the USD JPY our point D was 78.6, which is where we had our short entry. So you take your fib from point X down to point C, and we can see our 78.6 is at approximately 134.110 or 112, right? So that is where we're looking to have our point C. Let me just remove all of these drawings here. Right, so at this 78.66 fib retracement, that is where we are looking to have point D, which is going to be our short entry, which is the same thing we had on the USD JPY on a 4-hourly time frame as well. And I'm just going to quickly mark these points. So A, B. I'm sorry, I just numbered this incorrectly. So we have point C here at the bottom, and our short entry we're looking for it to be point D. Sorry, just made a mistake. Right, so now we have two things here. We have remember when we spoke about the Elliott wave, we're looking for A, B, C correction, and what we can also see is that this market structure has been broken. So this previous resistance here has been broken, which is now going to be serving as support. Let me just insert that zone or area. So we can see that this range here, it has been broken, and we're coming back to retest it, right? And we'll be looking to go long, but before we go long, we first need candlestick confirmation, which we are going to be looking on a lower time frame. So we'll be looking to go long at this level here, the retest, ultimately leading to that point D, right? And then at point D, we'll then be looking to have a short entry with regards to our XABCD pattern, which was nearly the same as the USD JPY. So we'll be looking to go short here at D. And now remember when I said that the overall market direction, we are still in a bear market if you look at the daily time frame. So this point, this short entry we're gonna have here at point D, then will basically be then our swing trade, which will be complementing the market direction on a daily time frame. So that is what basically a quick summary that we have on the GBPJPY. So I just thought that I should explain this setup because a lot of people did not actually understand it. So yeah, I will make a second video with the entry points, how we get the entry points, and I'll share it on the Signals network.